Good day, my name is Sophia Earl, the Compliance Officer at Highland Prime Realty Limited, and today I will walk you through a real-life compliance scenario, which is a proposed $2.8 million beachfront villa purchase that triggered my sense of reasoning and serious anti-money laundering concerns. This presentation covers how my agency applied a risk-based assessment approach in accordance with the Jamaica's Poker Act 2007, the TPA Act, and the FATF recommendation and the Real Estate Board AML guidelines. Now let's begin. Based on the scenario, a risk-based assessment must be done. And what is a risk-based assessment? It is actually the process by which a real estate dealer assesses a transaction just to identify the likelihood of a client or the transaction being linked to money laundering or the financing of terrorism. Based on this scenario, a risk-based assessment must be done because immediately this client is high risk and 9 individual red flags were triggered. These are: he is a foreign national. He wants to pay $2.8 million entirely in cash, which is a classic money laundering placement indicator. He's routing funds from multiple overseas accounts, which is a layering indicator. He refused to disclose the source of funds. He's using a foreign corporate entity to purchase the property, which conceals beneficial ownership. He's requesting minimal documentation. Urgency to close quickly, a third party directing the transaction, and buying a property that values more than its stated income. This client is high risk and my AML obligations are fully triggered. Now, knowing your customer is important because Mr. Hartley definitely is someone that we need to identify and know where his wealth is coming from. So what we need to identify, who is he? We need a valid government issue ID, driver's license or passport. We need a bill as proof of address or a JP letter. His tax registration number, his occupation and employee details. We need a complete contact information about him, and we need to know his source of funds. Now, customer due diligence. Now, with customer due diligence, one of the 2 things that we need to focus on is to understand his source of funds and source of wealth. Now, his source of funds, we need his bank statement and wire transfer records from each of the overseas accounts to trace the origin of the cash. For the source of wealth, we need minimum 3 years tax returns, employment history or business ownership documentation, payslips, investment portfolio, or documentation showing he acquires his wealth. If Mr. Hartley refuses to provide this information, it automatically signifies another red flag, and it means we cannot proceed. Poker Section 101A makes it an offense to conduct cash transaction exceeding $1 million. To avoid structuring, which is another way of hiding money, where someone breaks up large transactions into smaller payments to avoid the threshold, this must be reported to the FID. Now, enhanced due diligence must be done. So, because Mr. Hartley is a classic higher risk client, we have to do enhanced due diligence, and it's mandatory. So the first step is to obtain written senior management's approval to identify whether or not this transaction must go ahead or not. The compliance officer must prepare a high-risk client file. They have to do several checks, such as PEP screening, median court record search, and of course the source of wealth and source of funds, screening of all parties against the OFAC, the UN Consolidated List, EU sanctions, and local FID and JFIU watch list. And after all the checks, the transaction proceed, there will be ongoing monitoring under the Poker Money Laundering Prevention Regulation, Regulation 7, and the client information must be updated and reviewed at least every 7 years. Now, if because of the suspicious activities there's and the indication keeps going on, there are several steps. Step 1, suspend the transaction immediately. Step 2, escalate the file to the MLRO, which was mentioned before. Step 3, document every single step in our compliance registry. The MLRO confirms, if the MLRO confirms reasonable grounds for suspicion, a suspicious transaction report is filed with the FID through the GoML platform. Now, what happens if we fail to comply? We'll be criminally liable for a Poker Act. Regular sanctions from the FID and Bank of Jamaica and the FSC. Rebuttable damage is possible because Jamaica may be placed back on the grey listing. And as real estate dealers, we are gatekeepers Jamaica financial system, and our compliance is a moral commitment to our country and our community. Now, my key finding is that KYC is incomplete under Poker and FSC guidelines. So for findings and recommendation, our 5 recommendations are: suspend the transaction, do not tip off Mr. Hartley, escalate it to the MLRO, and file an STR with the FID via GoML if warranted. obtain written senior management approval, complete full KYC and EDD, including PEP, sanctions, and beneficial ownership checks. Now that ends my presentation. The references and closing statements will be attached, and I thank you for your time.